Hey guys, what's up? My name is Shane from AwakeFX and I want to welcome you to this trading video. Now, the last video that I showed you guys, number 2 video, was a video where I showed you exactly a euro-dollar strategy that you can use step by step in order to trade the UK Open. And in this video, it's really a follow-up to that one where I'll show you an example from last Friday of a trade that developed and how you could have profited from that trade using the strategy I showed you in my second video. Now, if you haven't watched that video already, I'll leave a link in the comments to the video where I showed the strategy initially. And in this video, you're going to see step by step how to enter, exit a trade based on what I taught you in the last video. So let's have a look at the charts and I'll show you how everything transpired. So we're looking at the euro-dollar chart here, guys. It's 5-minute chart, so each candle represents 5 minutes. And this is how it was looking last Friday morning. So today is Monday, the 30th of January, 2023. And I'm just doing a chart replay here of last Friday. So it's not a live trade here or anything like that. It's just I'm using bar replay to show you the setup, how it occurs in this time slot that we mentioned in our last video. So as I mentioned, one of the first things I do in the morning is I draw up this box here to denote the time of 7 a.m. to 10 a.m. GMT. Okay, and then I do the 2 vertical lines, one at 7:30 a.m. and one at 9:30 a.m. GMT. Now my charts are set to New York time down here at the bottom, so don't let that confuse you. I'm 5 hours ahead of New York here, based in Ireland. So this is the 5-minute chart. The first thing you do is you set up your time zone box, okay, your session and these lines. And then the next thing you do is you look at working out, well, where is my buy side, where is my sell side? So I'm going to mark up the buy side location. So what you're looking for here is, okay, where on the left here is there like a major swing high point? So there's been a sharp move down here in the last period block of time. So I would put my buy side above this high here, okay? And then secondly, you're looking to put in your sell side. So where would that be? There's a big void of out here on the left-hand side. So it's quite obvious that this low here is the most recent sell side that we can see. So there will be sell orders below this level and up above here, buy orders above this level. Now, when it comes to taking trades, what I would like to see and what I'm searching to see in the morning is for price to come down below the sell side, take out these sell orders and then move back above and give me a signal to go long. And I would be targeting a move to a previous high. And similarly, if price moves up here and breaks the buy side, I would be looking for price to come back into the range and look for a short. However, kind of based on where we are here, we're much closer to the sell side than the buy side. So I'd be more inclined to a long position based on where the market is right now. So we're going to move candle by candle here and show you what transpired last Friday, and we're going to use this setup exactly as I taught it in the last lesson. So let's look at each candle one by one. So here we are looking at the market move in the morning. Candle by candle. So now we've started the session as I denoted as 7 a.m. and I only take my setup between these two times. Between 7:30 and 9:30 is usually when I see the setup that I'm looking for. So we let price move. Okay, so we're kind of moving upwards. Okay. And then the 7:30 a.m. time starts. So at this point in time, I'm not interested in taking shorts. Okay, we've marked our buy side, it's way above market. And we would be interested in taking longs, but as I mentioned, price would have to come down into this area. And then if it doesn't happen, if neither happens within this time slot, I don't take a trade, and I wait for the next day and that's it. So the less you trade, I believe, the more money you make, because it's about waiting for your setup. If it appears, you take it. If it doesn't appear, there's no trade, and it's as simple as that, and follow your rules. So price is moving along here. Okay, what time is it here? It's it'd be like 10 to 8 in the morning. So we're just kind of waiting for either buy side or sell side to be hit. So here we've got a big move down into the sell side. Okay, now as this is a 5-minute chart and it is one of the most volatile times of the day, it's a good idea when you're kind of close to potentially your buy side or sell side to zoom down maybe to a 1-minute chart so you can see much clearer what's happening at this level. Okay, so price is very close to sell side here. It's taken out this low here on the left already, but hasn't taken out this low over here. So what happens next? Okay, so we get a move below sell side and a close above on the 1-minute chart. So this is very significant. What this is telling me is that, okay, we're after taking out some sell orders here. Price could continue moving down. I don't know. But if it starts moving off and taking off from this level, there's a good chance we're going to make it for the other end of the range. Okay, so let's see what transpires. Okay, and there we go. We get a large move upwards from our zone. So now I'm literally, in the back of my mind, I'm thinking, okay, I'm looking for a long trade. Where can I get in? Do you know, where can I get into this trade? And as I mentioned in that last video, I either use a fair value gap or maybe an order block level as an entry. So what I can see here at the moment is there is a fair value gap from the high of this candle here to the low of this candle just above. So I'll mark that in. In green. So this is a zone I'd be interested in buying in if price comes down into it. Okay, so I'd be planning to set up my long order with an entry within this fair value gap, say somewhere like that. And my stop loss would always be below the low. And then I'd be targeting above the market, somewhere like here, this high. So that would be a nice 3.79 risk to reward ratio. So let's see, do we get an entry? Okay, price does not come into the fair value gap here. So let's keep moving forward. Okay, we don't get a move in here. So price moves up and away. What you notice here, actually, there is this is an order block, that black candle there. Order block, I'll just mark it up. Because prices had to move up, stalled, we've broken higher. So the top of that candle there will be classified as an order block, a level of interest where price can sometimes bounce against before moving forward. But still, I would leave my order down here below market if I was taking this trade. Price has moved higher, so it's really showing an interest to move to the top of the range. Also, if you pay careful attention, you can see the low of this candle to the high of this candle. There's another fair value gap that's been made. So let's draw that one up here. So what could happen next? We could have a move down and just enter this fair value gap and then move away and not come down to the lower fair value gap. So at this point, I'd be looking at this order block as a potential entry level. So maybe move my entry level a little bit higher, somewhere like this, around where that order block level is. Price could just come into the fair value gap. So it's about kind of looking at a place to enter, but making sure your stop is below the low and making sure that you're going to get at least a 2-to-1 reward to risk ratio. So you can see the reward to risk here is 1.69. That's not good enough. You know, I want at least a 2-to-1. So I'd be looking maybe an entry somewhere there around the order block level, maybe just below this fair value gap. But our stop is down low enough that if price comes down and hits the first fair value gap and moves away from that, we're not going to be stopped out. So I'd be happy with that. It'd be a 2-to-1 reward to risk ratio entry here. Let's see if we get a fill on this one. Okay, so price comes down, bounces off the fair value gap. Okay. There we go. Boom. It comes right down, bounces, hits our order block. So we will be potentially filled on this trade then here. Okay. And in the trade long. So let's see if we can get a move to the upper end of the range. Price immediately bounces from that level. Move up, up, boom. We've hit the high. So there's an example of an entry, stop, take profit, and if you're risking 1% in this trade, you've made 2%. And these are the kind of trades I look for in and out every day. Now, I didn't take this last Friday because I was away from my screen. I wasn't in my office on Friday. I was doing a few other things. But this is an example, as I mentioned, based on what I explained in my previous video. So if you haven't watched that, take a look down in the description there. I'll leave a link to that video. Check it out. And then have a go at this. See how you get on. Check out the euro dollar in the morning. Can you see these kind of setups lining up? If the setup is there, take it. If it's not there, don't take it. But definitely, I recommend you practice on a demo or a practice account if this is something you're interested in doing. And just as a recap there, what were we doing here? Okay, so as a recap, it was 7 a.m. to 10 a.m. GMT time. We set up our 7:30 a.m. to 9:30 a.m. time slot. We had our sell side here below the market. We had our buy side above the market, which it never came close to. Price moves down, takes out the sell side. So we're considering a long, and then we're looking for a setup. Where can we get in? So we're looking for a nice displacement, nice move, fair value gaps, potential moves in there, and then we get our setup by being patient, and then we take the trade, and then we're done for the day. So if you only get 2 or 3 of these guys a week, that's 4 to 6% a week potentially. So there's huge potential in this kind of setup. And just sticking to it and don't trade anything else. That's what I do. And I find it really, really, really great. So thanks very much for watching. Hope to see you in the next video. And please like and subscribe because I plan on making a lot more valuable content like this, which will really help you with your trading. And please feel free to make a comment down below if there's any particular videos you'd like to see as well. Thanks a lot. Bye-bye, guys. See ya.